Good afternoon and welcome to all attendees on this Shekel Brainweigh webinar. My name's Andrew Emmett from NWR Investor Relations, and I'll be hosting today's 30-minute call. Online we have Nir Leshem, Shekel Scale CEO from Israel. We've got Nadri, Country Manager for Shekel Brainweigh here in Australia, and Barak Nir CFO, Shekel Brainweigh. The purpose of today's call is threefold: to present the highlights from the FY21 results, but most importantly to highlight some impressive milestone achievements for the first quarter of this year, FY22, and also to outline the Shekel strategy for the remainder of this year and beyond. Attendees can submit questions throughout the presentation via the chat box. I'll be monitoring this and put them to the panel. Questions that we don't manage to get through will be answered separately at a later time. I'll now hand over to Mr. Nir Leshem to run us through the latest presentation, followed by Danny and then Barak on the numbers. Over to you, Nir.
Thank you, Andrew, and good afternoon to the audience. Danny, let's please advance the presentation to the first slide.
We seem to be having some difficulty in moving the slides. Yes, that's always happened. Okay. Neil?
Right. Yep, thank you. So let me kick off the deck today, this afternoon, starting with reminding everyone of our vision in Shekel to become a global market leader in invest-winning technology. And here in Shekel, we're basically aiming our technology to be involved and improve everyday life by providing smart weighing-based system, our technology, to shift data to a valuable information and support our customer needs, basically help them improve their offering and be successful in their tasks to their customers. Moving forward, I would like to maybe talk a little bit about the Shekel journey throughout the years, starting back in 1971 with our core business, which is weighing scales, to the medical and retail market, basically serving some of the key customers within those markets: General Electric, Fujitsu, and Toshiba. And there's a long list of other customers which we've been serving throughout the years, providing them with the top-of-the-line weighing scale. As we move forwards and advance towards the retail innovation market, we basically position Shekel, adding the artificial intelligence to the IoT load cell sensors that we have, and creating solution through the data for contactless or frictionless, for the frictionless retail market, working with some of the biggest technology provider in this market space, such as Intel and Hitachi, and I'll talk more of that as we move forward in the presentation. Please move to the next slide, Danny. So the way we look at the market space in which we operate within our core business over 50 years, so we divide the market into the healthcare, the retail, and the industrial, in which we continue to be a leader or leading supplier of weighing technologies to those markets, supplying to some of the biggest blue chip customers and enabling our customer with digital transformation on an ongoing product development and R&D. If you look on the right bottom slide of the deck here, we basically had a great year in 2021, achieving a record revenue of $22.2 million, which represents a 26% growth and a profitable basically across our portfolios. Let me drill down to the next slide, drill down into some of the specific market results for the year, starting with the healthcare solution, in which we basically supply some of the leading, as I said, customers in the marketplace with our precision weighing systems and with our HealthWeigh product line, which is the fitness scales, physician scales, special needs, baby and neonatal scales, portable scales, basically our product offering. We landed last year in 2021 on a $9.87 million, almost $2 million growth versus last year, so 25% growth. And the market opportunity here is continued to be the recovering of the healthcare market and the budgets, which is returning to the elective care following the COVID pandemic. And we are optimistic that these trends will continue as we enter 2022. Moving forward to our retail market, in which we supply our self-checkout or our Weighings technology to the self-checkout system, the scanner scale, ProductAware shelving and units, and the smart cart application to some of the largest customers in the marketplace. And you can see the list on the right side of the slide here. We landed on $7.2 million last year, $1.3 million, over $1.3 million growth, 23% in growth. And the market opportunity is continued to be very attractive for us, as we're projecting that the self-checkout and the frictionless market will continue to grow double-digit at the horizon of the next 5 years. So great results on the retail market as well. And lastly, our third market, which is the industrial projects and customer service, largely local market and largely custom-made solutions for our customers. And we are here in Israel basically serving the entire segments in the market, all the way from agriculture solutions, manufacturing, military, and our baggage scale solution to the airports. Very local, unique market for us. And here also we greatly landed on $5.1 million last year, almost $1 million growth versus the previous year, represent 20%. And we continue to provide customized solutions to our customers here in Israel, follow up with service solutions across the segments. So that was briefly the results for last year. And before I wrap that up, I'll just say 2021 was a great year for Shekel, cross portfolios, cross geographies, with significant growth, over 25% growth for our business. And I will also add profitable growth. So shifting gears, talking a little bit about our technology. Some of those new products that I'm presenting are in commercializing phase already. So the first one I'll present is the smart cart, which is our Shekel weighing application for smart carts shopping experience. It's basically a self-checkout solution which is embedded within the cart, provide data capabilities to help prevent fraud and automatically issuing the restocking alerts as well. We just received 3-4 weeks ago the first order for a smart cart application for some of the biggest manufacturer in the world for smart cart. And we continue to develop the all-in-one smart cart device, both for the legal for trade and the security application. As you can see in the picture here, on the bottom of the basket, the security scale of Shekel, and on the top of the cart, you can see the legal for trade scale. And we continue to see great interest in generation 1 of those products in the smart cart market. So this is very exciting for us. And moving quickly to an update on the fast track application, which is the visual fruit and vegetable recognition that provide frictionless and computer vision based self-checkout. It's basically scalable to meet any size of a chain store, automatically updated across the network. We're currently at a phase of a minimum viable product, an MVP phase, which was installed here in the north of Israel last Wednesday. And we'll run, the MVP phase will run through the next 2 months. And we are hopeful that we will wrap it up successfully to go to the next stage, which is the pilot rollout in end of Q3, maybe beginning of Q4 this year. So moving forward, I want to give you a little bit of an update on the ProductAware technology from Shekel that enabled the retail automation through the advanced solutions. So again, great year for us in this product line in 2021, with a revenue of almost $1 million, of $900,000, that represent an exponential growth of almost 245% over last year. We fully commercialized our smart fridge and autonomy store. both in US and Europe and Israel. So I'll talk a little bit more about it as I move forward in the presentation, but let's go quickly to the next slide, Danny, please. Basically our shelving, our smart shelf technology, it's a one-way platform with multiple product recognition capability that allow the customer the accuracy of over 99%. Huge database on the grocery, different products, weight, and differentiating even between very similar products, such as you see in the picture, between Pepsi, Fanta, or Coca-Cola on the same size bottle. Very flexible, agile technology, allow more than 10 SKUs per shelf with a remote planogram control capability. And the solution is affordable for our customers, mainly when you compare it with some of the competitive technology in the marketplace, such as computer vision and RFID systems. So this technology is in the marketplace right now and basically proved itself to be very efficient to our customers. Moving quickly to the next slide, please. Let me give you a little bit of more information on those two product lines, the smart vending machine, and right after that, I'll talk a little bit more about where we are in terms of the base or the smart shop. So the Innovendi and Abs smart coolers, Innovendi was our first generation smart cooler. The Abs is the second one, which is basically a micro market smart fridge. You can allow a new variety and broad variety of fresh products. Deliver high revenue per machine. The market is the high-end smart fridge, currently at 50,000 units. We're targeting both the US and the European market. The Abs is a collaboration of Shekel with Imbera, the cooling manufacturer, and Power Level, the system management manufacturers. Our business model is one-time payment of the hardware and equipment, our smart shelf system, and we charge monthly SaaS revenue for the data collection. Commercialization, or basically where we are, Innovendi was launched back in 2020. We currently have 130 installed base units, basically or primarily in Israel, working with Tnuva, the dairy company. The Abs was honestly launched really early 2022 or end of 2021. We see great success taking place. We have more than 100 units installed base in Europe and in the US. Out of that, about 67 units is purchased by one customer in Belgium. The other units are installed in the US, and we continue to see demand coming through our systems for more units this year. So we're basically looking at hundreds of units to be installed in 2022. Moving forward to the autonomous stores. So basically our product here is equipment for fully autonomous retail stores. It's either a single shopper, a multiple shopper, or store within a store configuration. It's frictionless, allow 24/7 shopping experience. The market is still early days of adoption by retailers, especially the micro market operators. And we expected hundreds of store solutions to materialize either in POC or pilot mode still this year. The business model is similar to the smart vending. It's one-time payment for hardware and equipment, and we charge monthly SaaS revenue for the data collection. In terms of where we are, commercialization process, the first store opened in 2020 in Casino, Paris. We just launched very early in the year, early in January, the Nourishing Bloom retail shop that you can see right here on the picture in the US, Atlanta, Georgia. It's fully operated 24/7 based on our Shekel technology. Next one will come very soon here in Israel, and we're working on several key projects with some of the largest retailers in Europe, together with GK company in Germany, and we're expecting those will materialize in Q3 this year. So very excited, and a lot of pilots coming our way, and also fully commercialized opportunities that we are delivering to the marketplace currently. So moving quickly, please, Danny, to the next slide. And I want to just remind everyone of the market we're looking at. So it's basically a market which is growing or projected to grow from $5 billion in 2020 to $23 billion in 2025. So huge exponential growth in terms of market size. You can see the split between the smart vending machine and the unmanned or frictionless convenience stores potential for growth. So very attractive market space for Shekel. And as I mentioned with reviewing some of the technology which is coming from the Shekel house, we are positioning ourselves to have a unique value proposition and a strong stand in this market arena. Moving forward, you can see maybe the wrap up of what I said. Shekel retail solution on the right bar of the slide here with micro market, the base technology, Chef-aware technology, the apps, smart vending units, solutions for visual self-checkout and regular self-checkout, unattended self-checkout, the smart card solution, capsule solution, all really flowing into the different opportunities in the marketplace, whether it's the residential application, the airport application, campus, convenience stores, hotel, have a POC, which is basically require some kind of retail or point of sale solution for food merchandise. Please, Danny, advance the presentation. I want to give you a little bit of where we are in terms of vision, and this is basically getting involved within the big data market, which represent huge number and a huge CAGR growth in the next few years. We are positioning Shekel to own the data, aggregate, share, and then monetize the data, the SaaS data, to be able to come with additional business model and leverage our powerful footprint in retail. So this is really exciting for us. I think next slide is so I'll wrap up my part here.
We will let Barak take over for the financials.
Yep, so I'll wrap up here and I'll open the floor for questions later on. And without further ado, I'll let Barak take over.
Thank you, Nir.
Hi, everyone. Good afternoon. As was mentioned, we'll start with a P&L. And we all saw the nice growth of the activity of the company from around $18 million to around $23 million. Alongside that, the growth of the gross profit from $6.9 million to $9 million. We managed to grow the gross margin, although problems and with supply chain and with components buying around the world. As for the OPEX, the sales and marketing expenses have gone higher due to recruitment of salespeople in Europe, and we recruited a marketing manager for the business in Israel. The G&A growth, G&A expenses growth is mainly due to two fundraising processes, one on January 21 and one on December 21, which cost us quite a few dollars. It was involved with legal expenses, both fundraising processes, and that is the main reason for the growth in general and administrative expenses. Financial expenses have grown substantially. Most of it is not cash expenses. Only about $500,000 out of the $2.8 million are cash expenses. The rest are related to IFRS accounting rules and mainly to reevaluating loan we received, a convertible loan we received for $5 million. According to accounting rule, it had to be reevaluated, and it was reevaluated to $6.3 million. So showing most of financial expenses are uncash expenses. The last comment on the P&L is that if you look at our financial report published last week, note 23 would show that the segmentation and the different differentiation between the traditional business and the innovative business would show you that although the company had lost $4 million on operating loss, out of that, a positive 2.5 million is for the traditional business, and a negative 6.5 is for the innovation business. Meaning, as stated in the beginning of the presentation, the traditional business is a profitable business. Moving on to the balance sheet, the main issue on the balance sheet is, of course, the convertible loan received last year for $5 million, revaluated to 6.3. The rest of the balance sheet is pretty much in line with the increase in revenues. That is the increase in trade account receivables, the increase in inventory, the increase in trade account payables. All are linked to the increase of the revenues in the activity. The lease liability is also an IFRS accounting rule that had increased due to the fact that we moved our main facility in Israel to a different location, and we signed a lease for 10 years. These are the main issues on the balance sheet, and we try to on a slide you see right now, we try to show what happened since we listed on the ASX at the end of 2018. 2019 was a growth year, but then 2020, COVID came at 2020, and mainly H1 of 2020 was a hard one for us. But since then, we're growing, and it looks like we're going to continue to grow on H1 2022.
So maybe for the interest of time, and that's also a question that we received, maybe Nir, you can already look at it. What do you see for Q1 in terms of the business activities and the growth for 2022, and how do you see the two divisions shaping up going forward?
Thank you, Danny. So, well, we have a very strong start for the year, basically saying both our legacy and our innovation business, retail business, is on the very ambitious plan for Q1. So we are with a very strong start for the year. And looking forward, we continue to see growth in the marketplace for some of our key markets, both outside of Israel and locally in Israel, both for the retail and the medical business. We really looking forward to continue the commercialization of the new technology I presented. So basically saying, Danny and the audience, very strong start for the year, continued strong growth right after very strong Q4 last year. And we continue to see strength in the marketplace. I will say that we do have challenges when it comes to the logistics obstacles globally. It has to do with shortage of electronics and has to do with basically some of the still COVID impacts in some of the key locations, manufacturing locations in the world and supply chain. But as we dealt very well throughout those challenges last year, we have a plan on how to continue and deal with some of those challenges in 2022 and deliver the products to our customers as they continue to increase their demand.
Thank you. We have a short amount of time, so we'll try to focus on some of the questions instead of completing the presentation. A question for Barak. So the company raised funds in late December and early January this year. What is the funds used for, and how do you see this play out?
Well, it's mainly for two goals. One is continue the sales growth, mainly for the new products of the innovation division, and the other one is to enlarge our ability to product and assembly. We're working in our factory in China for the last couple of years, and we're thinking of doing some changes there that will cost us some funds, but will allow us to continue and produce everything the market calls for.
Thank you. Let me just see how this.
Danny, I've got one here that's come through.
What's that?
I have a question here that's come through, and it's for you, Barak. It's just regarding the balance sheet strength. Again, I think you did cover a bit of this, but do you have sufficient cash generation and facilities to see the business through the remainder of the year and next? I assume no further capital raises.
Well, I don't want to talk about next year because it's far away, but it looks like this year, if we keep the pace of the growth as it is, then we're covered. We might find ourselves in good surprises, like receiving major orders of the new products, and then the ball game would be different.
Okay, and another one that's just come through relates to the R&D spend. How do you see that playing out over the remainder of the year?
The budget we put on for ourselves will show a bit lower R&D expenses this year than last year.
Mm-hmm.
Andrew, anything else?
The question, Andrew, was how we use the R&D investments?
Oh no, just the level of R&D spend.
Okay.
Yeah, is it going to taper off from this level?
Yeah, just a bit.
Yeah. There is another one here just on input cost inflation. Is this an issue and across the Scales and Retail Innovation division?
Well, I can take this one, Andrew. I mean, cost has been challenging for us through 2021, and we think it's probably will be the same case in 2022. And I'll tell you what we do. Basically, there's no more fixed prices to any of our products, whether it's the retail innovation or the legacy products, whether it's medical or retail. We purchase the raw materials and we determine the prices and according to the cost of the bills, the BOM, the bill of materials. So we're very agile, and we basically working closely with our customers that to make sure that we increase prices as needed or decrease prices if we have a better or lower cost buy according to the situation, to make sure that we protect our margins. And also, obviously, we're working on an ongoing contingency plan across the organization to make sure that we protect our margins as we move forward. It's a very challenging environment right now that we're dealing with, and we want to make sure that our margin kept protected as we move forward.
Okay.
We're reaching 5 p.m., so that's pretty much the end. We want to thank both Barak and Nir. Barak is with us in Australia and Nir in Israel, and thank you NWR for helping us setting the webinar. We're recording it, and it's exciting time to see that Q1 is continuing a fourth quarter growth in the company. So we see a continuous growth for the last 5 quarters, basically, and the company investing in additional marketing activities. We're at NAMA show in the US this week. We're going to be with the Vend Italia and with Eurocy. So the company is definitely pushing additional commercialization within 2022. So we're looking forward to an exciting year and updating you more in the future. Thank you very much for your time, and that would close the webinar.
Thank you, Danny.
Yep.
Thank you, Nir and Barak. I do have some other questions that have come through, but we'll get back to the individuals on those.
Thank you so much.
Thank you.
Thank you. Bye-bye.